who is one of our new subscribers. Susan, I hope, oh man, I hit the camera. I'm clapping. Thank you, Susan, for being one of our new subscribers. All right, guys, let's see here. Real estate market update. This is something we do every single week as well. We do a quick real estate market update. And with that market update, we talk about new things, new trends, things that we need to be aware of. And so one thing I think we need to be aware of here, guys, is the cost of building and builders. So home buyers are warned of builder contracts. This is something a lot of people don't know about, and you need to know about it. Does the builder have the right to cancel a contract even though you're already under contract? Can the builder pass on labor and material price increase? So what we're talking about here is if you're under contract and the builder says, nah, I don't want to sell it to you, can they do that? Is there something in their contract that says that? Can a builder pass on labor and price increases? Oh, hey, wood went up, wood doubled, so we're going to increase the price of your house by 30 grand. Can a builder do that? Does the builder have the right to increase the purchase price? Say, hey, you can now bring that price up on the property. Well, it varies builder to builder, but one thing you have to be careful about is most builders use their own contract. They don't use like a standard real estate purchase contract like a lot of agents do. So it's land, it's labor, it's materials. I can't even think of something that isn't difficult right now in that build process of being able to build. So you are going to be seeing some of these some of these builders are going to cancel their contract because they have the right to do it. Some of them are going to renegotiate a price and put a higher price in there and say it's got to go higher. We can't sell it to you. This can be really problematic for a homeowner that may have sold their house, has a new home built under contract, and the builder comes in and pulls out. So be careful about that and pass this news along to other people that may be in the building process so they can be aware of that. Let's see here. Ray says you can find a lot of off-market properties. Yeah, absolutely, Ray. If you do the right strategies, off-market properties take a lot of work, but they also make a bigger payday for you. So it's really important to keep that in perspective. Real estate prices soar across the country. I don't think this is new news to anybody. Sky-high lumber prices to drop by end of year, according to Bloomberg. A lot of analysts say that. That's really good to be seeing these prices start dropping down by the end of the year is what they're hoping for, and that's something to take into consideration. Mark says, how about some videos in the DoHardMoney office? Shows us your staff. What can you do for Mel? What's Mel? I thought your name was Mark. Mark. Yeah, we could do that. We have several with the office and that type of stuff, but we'll shout some out. You want some live cast videos of that, or you want some just recorded and put up? Mark, I'd like to know. Kate, if you'll make a note of that. And Mark, give us a little more feedback what you're looking for there. But yeah, we'd love to introduce you to everybody, one of our team meetings. And as a matter of fact, Mark, once a month, we have somebody come to our team meeting virtually, and they can meet the entire team. So maybe we should have you on for that. Kate, will you reach out to Mark and let's hook him up and get him into one of our team meetings. Check out some of the Ask Ryan videos in the office. Yeah, okay, yeah. I tour the office quite a bit, but yeah, I'll put that in there. So thanks, Mark. Appreciate the feedback. About 4.8 million millennials are turning 30 in 2021. Can you believe that? Many are expected to enter the home buying game again. How many millennials do I actually have on this call? I'd be curious about that. How many of you are millennials that are on the call? You don't have to say it, but I think it'd be interesting to see. And many of these are expecting to enter into the home buying game. Millennials are getting older and entering a new stage of life, casting off their long-held moniker as the renter generation, says George Rada, the senior economist at Realtor.com. Interesting. Of these, 43% will be first-time millennial homebuyers. 43%. That brings more buyers to the marketplace that haven't been there before, which will keep prices increasing unless we see some more inventory coming on the market. COVID hurled jet fuel on big city exodus, and it won't stop, says real estate developers, according to Fox Business. Daily digest for real estate investing. This is from Million Acres. This is kind of the best of times and the worst of times saga unfolding here. Supply continues to seriously lag demand, flipping some of these metrics in the red while driving up prices to record levels. It's a great time to sell for homeowners, not so much in the buying category. A couple of things you need to think about as to why a real estate transaction may become delayed. Maybe financing issues, appraisals, title problems, home inspections, and the current market. If you're one of our members, we have lots of stuff to help you so that you can overcome these problems ahead of time, and lots of them with some planning can do that. Biden has some interesting things he is proposing. One of the things, lots of business owners and real estate investors are able to take advantage of what's called a 1031 exchange. This is a deferred tax strategy, and this is one of the things Biden is talking about going away from. Deferring the tax on an exchange, if you start off with a small property and then exchange it for a larger one, both properties have to be like kinds exchanges, but Biden's campaign noted last summer that his administration would target like-kind exchanges. This is really, really interesting if you're holding long-term properties. A fix and flipper, it makes no difference to you, but if you're holding long-terms and you're trying to sell, that was a huge thing that can happen. Another thing that Biden's looking at is some tax proposal can impact some real estate investors, non-residential real estate owner to depreciate improvements. The president has proposed eliminating the bonus depreciation rule for commercial properties and reverting to a 39-year depreciation. So what this was called is accelerated depreciation. This really has to do with more long-term holds, so if you're holding the property over some time, but this is a huge benefit where you could depreciate things faster rather than taking them over another traditional 39-year schedule. Keep your eyes peeled. That's something I am very concerned about. Let's see here. Lost connection. I haven't drove. Maurice, did you lose connection or was that on our end? I'm really curious if we lost connection. Let's see. I haven't drive for dollars in a while. We'll be back at it soon. Quite few properties here. Well, that's good that you're seeing some inventory. That's what all you can ask for, and get those properties under contract. There are more real estate agents than homes for sale in the United States. The lack of existing homes was only part of the problem, though. Builders have struggled to ramp up construction on new homes, particularly the most important single-family models. Okay, guys, how U.S. housing market was rocketed by COVID and where we can go from here. Once the foreclosure memorandum ends, homeowners who have been able to financially rebound from the crisis may be forced to sell their homes. This could also add to the supply of properties on the market. That will help alleviate scarcity concerns, says lender Andrews. I'm really looking forward to that moratorium lifting, because one of the things, according to the New York Times, is saying here, where have all these houses gone? If you look back in 2015, we were somewhere between 1.2 and 1.5 million homes on the market for sale on the multiple listing services. And you can see even in 2019, we started that year about 1.2, or early on in that year about 1.2. In 2020, you can see we had dipped. We were closer to about 900,000, and we're under 468,000 as of right now. So what's happened is there's just not a lot of new home inventory coming on the market. There are more buyers than there are sellers. We're seeing this as a continuing problem and trying to keep up with it. The typical homeowner in 2020 had to remain in place for 13 years. This is up slightly from 12.8 years in 2019 and well ahead of 2010's reading of the 8.7 years, according to the new analysts by real estate brokerage Redfin Corp. About 1 in 4 U.S. homeowners has lived in the same home for more than 20 years, the study shows. All right, 2.72 million homes were made in forbearance. This is what we're talking about. This foreclosure moratorium has stopped these from coming through. And you can see here, we saw more active forbearance plans that were happening. We're seeing it level off. This is from March of 20 all the way through October. I don't have newer data on this, but you can see this is really interesting. The number of homes that are 2.7 million, 7.2 million that are actually in some sort of a foreclosure status. More than 200,000 new listings are missing from the U.S. housing market. Whoops, hit the wrong button there, guys. March 2021 housing report. National inventory declined by 52%. Newly listed properties declined by 20%, 17.9 in the large metros. Basically means there's fewer and fewer houses. March, 370,000 was the national average median list price, 370,000. That's 15% higher than it was last year. So if a house was 100,000 last year, it's now 115.6. And we've saw a huge gain on that. Nationally, the typical home spent 54 days on the market, which is 6 days less than it was before. Maurice says, DoHardMoney might have been my end, but back up now. Might have been my end. I'm not sure what you're saying, Maurice, but we're happy to have you. Oh, might have been on my end. I gotcha. Oh, the blackout. Did anybody else get blacked out on did YouTube stop for anybody else, or was it just Maurice? Just trying to figure out if it was on his end or our end. Obviously, I got camera problems today, so I'm like worried about everything being a problem today. So if you've been on YouTube with us, let me know if you got paused out. Okay, let's talk about our property finding tip of the week. Every single week, I want to give you something you can use to actually find properties, okay? So this is something, let's see, been solid. Okay, so it looks like 2 of you had an issue. Let's see here. Looks like S. Young went down as well, but Mark is saying, I have been solid. Mark, are you saying that the technology has been solid, or I have been solid in delivering amazing content today? Just kidding you. But I'm glad it's working for you. Property finding tip of the week. What we are going to talk about today is dismissed bankruptcies, okay? What are dismissed bankruptcies? How can you use these? And this is something that I think as these foreclosure moratoriums get lifted is going to be really, really important, as we know. So what is a dismissed bankruptcy, okay? When your bankruptcy case closes, I got to grab a drink here, guys. All of the above. Thanks, Mark. I really appreciate it. Kate, if you can take down those couple of people that dropped so we can make sure we can do a little research on that. So a dismissed bankruptcy, okay? This is when your bankruptcy case closes. If it happens before discharge, it meant you lost the protection of the automatic stay, meaning the creditors come after you. So this whole concept of a bankruptcy, it delays creditors from being able to come after you, so that you can either try and do one of 2 things. You try and restructure your debt, which is called a Chapter 13 bankruptcy, or you do a Chapter 7 bankruptcy where you get a dismissal of all that. And so what happens is you file for a bankruptcy, or somebody files for a bankruptcy. When they file for that bankruptcy, they either try and put a repayment plan together, which is a 13, or they go for a full dismissal. Now, to do that, they put a plan together, go in front of the judge with an attorney that says, we need these things dismissed, and here's why. And there's rules around how that can actually happen. Okay, so if somebody does that, if they get it dismissed, that means it happened before discharge, meaning it wasn't finalized. So this could be they didn't make all the payments. This could be they didn't qualify, or whatever the case may be. This is a great opportunity, because if somebody files for bankruptcy and the bankruptcy dismissed, they still have all the problems, right? The problems haven't gone away. All their creditors are still there. They're coming after them for more vengeance. So what's the difference between a bankruptcy dismissal and a bankruptcy discharge? So a dismissal is you ask the court to dismiss it. There's involuntary dismissal. You have not followed the rules. You don't have everything that you need, or you haven't filed correctly. You haven't been honest with the judge, and so the judge is like, nope. Cooperating with a bankruptcy trustee. Some reasons for involuntary dismissal. File the bankruptcy schedules and other forms on time if you haven't done that. If you haven't submitted your 529, paying the court fees for filings, not paying that, attending the 341 meeting of creditors, make all Chapter 13 planned payments. These are all reasons why somebody's bankruptcy could be dissolved or dismissed. Okay, if you're not staying current on child support or alimony, if you haven't provided the right paperwork or been truthful in that, if you pass the means test and filed a certificate showing you've completed the credit and debt counseling. Now, you don't need to know all these things. You don't really even need to know any of these things. I'm just sharing it with you so you realize, hey, if somebody files for a bankruptcy and they don't do some of these required items, the bankruptcy is dismissed, right? And if the bankruptcy is dismissed, there's a prime opportunity for us as real estate investors to one, help that guy, and two, to make a deal with him. Now, discharge. This is where the debts are actually wiped out. So dismiss means you didn't follow through on the bankruptcy. You're back to square one, buddy. Okay, that's what that means. Now, discharge is different. Discharge is where the debts are wiped out. You're done. So you've either made all your payments on that Chapter 13 or you've gone through the Chapter 7, you've played by all the rules, boom, all those debts are gone. And so you follow through with the plan and the filing. So dismissed bankruptcy, this means somebody filed the bankruptcy. For some reason, the bankruptcy has been stopped. Now all the creditors and everybody can go back after that person. It means they have financial problems. If they have equity, they're an ideal candidate to try and help make a deal happen. No. Now, some will dismiss a Chapter 13 and then convert it into a Chapter 7. So you've just got to be prepared for that, because you might be going after some people that were dismissals, and then you find out, oh man, they already did a new bankruptcy. Well, this is why. So there's some laws around this, and this shouldn't discourage you from going after these types of people. So bankruptcy information is public. That's the first thing you've got to realize. Anybody who files a bankruptcy, that is public information. Anybody can find out about any bankruptcy ever filed. The problem is most people don't know where to go to find it, and they're not willing to go down to the county recorders and do all the work. However, if you have access to some killer software like some of you guys do, like Investor's Edge, it will pipe that information in so that you don't have to go track down all the cases, the names. It's a headache and a half to track that stuff down. You can use Investor's Edge that can do that for you. So what you're going to want to do is go under liens and bankruptcy, divorce status. I'm just going to show you some. Who else here from Chicago? I think Ray said everybody's from Chicago. Yeah, everybody is from Chicago. Okay, let me just I'm going to give you a Chicago example. How's that? So let's just come over here. So let's just put Chicago. Okay, perfect. One of my favorites, Chicago. Okay, and then what we're going to do is we're going to come here to the filter just to give you an idea. And there's this tab called liens, bankruptcy, divorces, right? And so we're going to go quick target, and we're going to say bankruptcy's been dismissed. Again, this means they filed it, but they didn't do something to follow through on it like they should have. And that says, hey, now there's 10,000 have been dismissed. Now, the other thing we want to come to is equity, right? So valuation and equity, and we want to look at estimated equity. Let's say at least 75,000. And you can see that's repopulating, and that would drop from 10,000 down to 7,000. Now, so for those of you that are struggling to find some properties, here are 7,000 properties that have $75,000 worth of equity where the bankruptcy was just dismissed, so we know they have financial problems. There could be a prime opportunity for me to come help these guys take care of their financial problems, unload the burden of the house, maybe get some cash in their pocket, maybe just break them even so they can get out of it and they can move on with life. These are prime opportunities. Now, what I can do here is I can find all these. I can create a list, add it to a new list. I can say these are BK properties, BK dismiss, all that type of fun stuff. And then what I can do after I make the marketing list, then I can come here and actually start doing some marketing. So I can skip trace. I can select those contacts and do a skip trace, and then I can make phone calls to them. I can send out postcards just right here. I choose those. I send them out. I decide. I put my number and that stuff's in there. I can do voice broadcasts, and I can actually do some email marketing as well. So with the email marketing, I can get that from the time that I actually do the skip trace. Now, my personal favorite is the skip trace and then make the phone calls. That's my personal favorite. I think it's one of the cheaper ways to go about doing this, but it does take some more effort. Let's see here. We got a few messages here. I want to make sure I'm keeping current with everything. Might have been on my end. Okay. YouTube's been solid. Got it. All of the above. Okay. Awesome. I'm from Alabama. Fantastic. Where do we find information on Investors Edge program? Michael, great question. Give us a call over at DoHardMoney. You want to talk to either Carlos or Hunter, and they can see if it might be a good fit, so you can look at getting some access to it. We love Chicago. Maurice. Yeah, and Michael, you'll want to check out the membership as well. Fantastic. So we looked at that, and we looked at some of those properties that are available. So then the question here is like, how do I approach them? Well, you can mail the postcard, you can call them, do the voice broadcast, you can knock on the door, but what do you say, right? Like, how do you bring that up in conversation? Well, the best way to do it is just call it out like it is. I understand you're having some trouble with XYZ Bank, whatever bank that is, Chase Bank, Bank of America. Now, you may say, well, how do I know what bank they're with? Well, it's really quite simple. You just come here and you look at the records, tax information, property details, and you can see in here who is handling the bankruptcy. This is a law firm that's actually handling the bankruptcy. And let's see, we've got the comparables. I don't know if I have, this is the tax information and the bankruptcy listings. It looks like mortgage. Oh, there we go. Mortgage. Here we go. Fidelity Mortgage of Ohio. Okay. So if I'm calling this guy, I'm saying, hey, my name's Ryan. I understand you're having some trouble with Fidelity Mortgage of Ohio. Those guys are a bunch of jerks, aren't they? You don't really say that. But so as a matter of public record, I understand you had your bankruptcy dismissed. And I help people that own real estate that have their bankruptcy dismissed, that, or have some issues with Fidelity Mortgage, wondering how I can help you. So this is personalized. I jump right to it. Now, what most people say when you do that is they say, I have it taken care of. And I say, oh, okay. Well, court records show you probably don't. Let me double check on this and get back to you. Is there a time we can talk, right? Because I want to hold their feet to the fire a little bit. So, and there's multiple ways to do this, but this is one way you can do it. See, the timing is everything. For calls, for door knocks, everything, how you approach them. Real quickly, I got a shout out from Maurice from Houston. Thanks for being with us, Maurice. Appreciate it. Not sure. I'm just starting out. DoHardMoney. Not sure. I'm just starting out. Young. Yeah. What are you not sure about? Be interested to know, because just like anything, this takes work, right? You got to put in the time. I like to tell people 15 to 20 hours a week, and plan on doing that for 6 months. In order for you to get a deal, and then you've got to rehab that deal and make the deal happen, right? So timing is everything, right? So for calls, for door knocks, weekends or evenings, that's when people are home. You want to knock on doors or talk to people when they're actually home, or make your calls when that's happening. So that is our finding tip of the week. We're talking about bankruptcy dismissal and how those can be used in helping to find properties. So guys, what did you think of that? Is it helpful? Have you done it before? Is it something you're interested in doing? Could it work in your marketplace? Well, if you're in Chicago, I think it could definitely work. We found like 7,000 properties that you could be chasing. What questions do you have? Type it in the comments. I want to know. I am going to grab a drink before we get into our main event, which is talking about the real estate market. All right, guys. How important is the housing market when deciding where and when to invest? I hear this quite frequently. Like, should I be buying now? Should I be flipping now? What's happening in the market? How's it going to last? What if it goes up? What if it goes down? What do I do? Do I get caught into a bad situation? Well, I think it's really important to step back and analyze the market and see some trends, which we're going to get into. So, a couple of things you're going to learn from today. You're going to learn what the real estate market cycle is. The market follows a pretty predictable path, and we're going to go through that. The best strategies based on the housing market, okay? We're going to talk a little bit about that. And where and when to invest in real estate, specifically what strategies you should be using and when you should be using them. Okay, there's a few different housing markets, and there's 4 cycles that you're going to be going through in the real estate market, okay? So the first cycle is recovery. Then it moves to expansion. Then it moves to hyper supply. then it moves to recession. Then it goes back to recovery, then to expansion, hypersupply, and then to recession, okay? So you can guess where we're at right now, but we're gonna tackle these a little bit deeper from each one. So let's talk about recovery. This is after the effects of a recession. Recovery is where it starts. Rental growth will remain stagnant. Rents aren't gonna be going up. They're gonna stay basically the same. There's no signs of new construction, right? There's just not a lot of new construction that's happening in this recovery stage. This is the perfect time to be investing in rentals as long as you can at least break even. If you can break even on them in the future, rents will go up. It'll pay it down. The values will go up. This is the perfect time to be buying rental properties. Believe me, this is the perfect time. And you can get a hard money loan and do a BRRRR strategy, get the money for the rehab and for the purchase, refinance out of it. This is the perfect time to be doing that. And you're looking for growth. You're going to see these properties, stuff that I bought in the recovery is now worth 3 to 4 times what it was when I originally bought it. Super happy that I did. Now, the next phase we get into is expansion, right? The economy is now improving. The job growth is strong. There's new jobs being added. There's an increased demand for housing. Now you're seeing a little bit of a rents rise. You're seeing more people that are going after. Renters and home buyers will start generating demand. There's more that's happening there. The market is on an upswing. We're seeing things start to trend upwards, right? And then that's where we get into what is called this hyper supply. This is a frenzy to ensure that supply meets growing demand. Is there enough houses for how many people want it? Well, this is the type of thing we're in right now. The tipping point, it was when supply exceeds demand, right? That's where the tipping point into the next phrase. Well, we're not there yet because supply is not exceeding demand. We do not have enough supply. Way too much inventory due to market shifts. So this is what will happen eventually in this hypersupply is there's this frenzy and then they'll be overbuilt and there'll be too many properties. And that's the signs we're kind of looking for, right? And then we get into what's called a recession. Okay, the recession is similar to the financial crisis of 2008. Now, keep in mind, the reason why we call it a financial crisis of 2008 and not a real estate crisis of 2008 is the root cause of this whole thing was financing. It's the way properties were financed. It was the way that they did liar loans where you could just do stated income. It's the way that banks didn't have stress tests to make sure that they weren't getting over leveraged or getting themselves into bad situations. Now, all things have been put in place to avoid that type of situation, but that's what really hurt the real estate was the financial crisis of that. Supply exceeds demand. There's way too many properties and not enough people that want to buy them. That's not the situation we're in right now, but we are in the precursor to the recession. That said, I've been looking for this recession to come over the last 5 years, and I really thought COVID would be it, but it wasn't. It actually did the exact opposite. With recessions, we see high vacancy rates, we see low rental growth, reduced rental rates, foreclosures, repossessions. This is a great time to buy. Fantastic time to buy is in this. The great thing about short-term investing, and this is why I'm a big advocate of short-term investing versus long-term investing, is you are in and out in 6 months. That's really the goal here, is how we can get in and out. It makes it a lot easier to see market changes because markets usually don't change overnight. We see those changes over a little bit of period of time, and that's one of the great things about doing fix and flip investments and also doing wholesale deals. Now, one of the things with wholesale deals that's even more impressive is you're in and out in a matter of weeks. So the risk that you're taking on there is even lower than you have in a fix and flip type situation, where a fix and flip, you're 6 months, sometimes a little more, sometimes a little bit less. Short-term investing is the key if you're concerned about market changes, rather than getting yourself into some long-term purchase opportunities. Long-term investing is great if you're in a recession or a recovery waiting for the hyper supply. But long-term investing in the hyper supply is not where you want to be going. How important is housing market on where to invest? That's what we're talking about today. By being aware of what happens in areas is most important. Where are we at in the cycle? What investing should I be doing during this cycle? And what are the signs I'm looking for that tells me I need to change my strategy? Because no matter where we're at in those 4 strategies, there's always real estate investing to be had. What's different is what strategy you're using based upon where we're at in the real estate cycle and knowing what's coming next and what are the precursors, what are the things I need to be looking for to tell me that a change is on the horizon. So as it changed, we know. Now, the other thing that's really important with this is real estate is localized, right? What's happening in my city and state is not happening in yours all the time. It's very localized. And so what may be true in one place is not true everywhere. The U.S. market may be in a recession, but some areas may be in a recovery. So it's not just about the overall market, but it's also your specific marketplace as well. What is the housing market in your specific area? What is going on in your specific area? Should you help decide what strategy you should be using? Now, the question comes down to when to invest. The answer is you should always be investing. That's one of the big mistakes that people make. If you try and time the market, you can get yourself in trouble. So it's not about should I invest or not invest. It's how should I be investing? What strategies should I be employing based upon where I think we may be in the market cycle? Because I'll tell you this, you're going to be surprised a lot. You may think you're in a certain market cycle, but here's the great news. If you invest based upon the market cycle you think that we're in, looking for the precursors or the signs of the one you're going to be going into, and you're always investing, you can do what's called dollar cost averaging and get into properties where it averages out. And that's especially when we're talking about long-term holds. If we're talking about wholesales and fix and flip, it's less of a concern. We just want to make sure we're careful, because if we're in a hyperinflation type or a hyper supply type state, and we don't want to get ourselves in trouble by holding too many properties. The other thing to keep in mind is as you see the markets going up, the lower end houses you can be in, the better off you will be. Those are typically the ones that have the least impact. If there is a market or price correction, the lower end homes take a less of a beating than your higher end homes. That's a really big pro tip to keep in mind here. The housing market should help you determine what investing strategy to use. Wholesaling, fix and flip, or long-term holds are all great strategies. You don't want to try and time the market. Looking and determining where we're at in the market, seeing the strategies that work best in those markets, and start investing now. You don't want to put that off. Too many people are always waiting to invest, and they're waiting for the next cycle. The fact of the matter is, real estate market is always changing, and it's always going to be changing. And so you've got to learn how to invest in a changing market, and you've got to realize what strategies you should be using based upon those markets. The best strategies based on the housing market cycle. In the recovery, you should be buying rentals. If you can just break even and it's a recovery, buy it. Wholesaling, you're in and out quick. They are harder to wholesale in a recovery stage, but you're in and out quick. Fix and flip, you should only be doing this on lower end properties. On an expansion, buying rentals, but being a lot more cautious. At this point, you need more cash flow. You can't do it as a break even like you could in the previous stage. Wholesaling, fix and flipping, this is a great time for fix and flipping. We're in a hyper supply, we're wholesaling. We're fix and flipping, but we're being very careful because at some point the music will stop, and we're going to be looking for some of those lower end properties. And in a recession, we're buying rentals. You'll notice in the last two phases, in a hyper supply, we're not buying rentals. In an expansion, we're buying rentals, but we're very cautious. In a recovery, we're always buying rentals. And in a recession, we're buying rentals and wholesaling. Now, you might not be able to buy rentals in the middle of a recession, or you may need to get creative and do some seller financing, take some subject to deals. Those types of things can be happening here. So the question is where to invest. It's always best to invest closer to you. The closer it is to you, the better off that it is. And if that's not possible, you can do out-of-state investing, but it requires more work. Wholesaling is the easiest to do out-of-state. Rehabs take a lot of work and oversight. If you're going to rehab out-of-state, you've got to have a team in place or someone you can truly trust that can be your eyes and ears when running their projects. This is just critically important. In the housing market, where to invest, you will see areas that are better than other ones. So you can. The key is knowing what will it take to invest in this new market, and don't overlook an opportunity in your own backyard of things that may be there. There's always opportunity. You may just need to change your strategy, and that's the thing a lot of people miss out on. All right, guys, great opportunity, says Michael. I appreciate it. Any of you that are interested in our Find Fund Flip system, Check it out at DoHardMoney.com/get started. Dozens of hours of training, deal finding software, access to our 100% financing. That's our Find, Fund, Flip system. You're going to want to check it out. Now, for those of you that want to get a copy of that purchase contract, go to DoHardMoney.com/purchase-contract, or it's even easier, just text us. Just text your email address to 435-294-0433. If you text that, you'll get an email reply that has a copy of this purchase contract that you can edit and use. Edit for your area. Again, if you enjoy these live casts, please hit that thumbs up, hit the subscribe, tell somebody else about it, leave a comment, especially on the recorded video. It means a lot to me. Mark says, go to rewatch. Good stuff. Going to rewatch. Good stuff. Thanks, Mark. I really appreciate it. The version should be out by tomorrow, so you can rewatch that. And please leave a comment on that recorded video. It means a lot to me. If you haven't already, get a copy of that purchase contract. Text us at 435-294-0433. Future topics. I'd really like to know what topics you'd like to see for future. What topics would you be interested in for future live casts? I've got some listed on the screen here. If you want to type them and get them in, that would be fantastic. So type those in the comments and in the recorded version as well as in the chat now. And don't forget to grab a copy of that purchase contract by texting us on that 435-294-0433. Now, if you like what you've heard today, you're going to love my podcast. I have a podcast called Income Hacker, where we talk about all things about getting to the next stage, financial freedom in 10 years or less. Check it out anywhere where you listen to podcasts. It could be Apple, iTunes, Stitcher, Spotify, you name it, we are there. And if I have any Income Hacker podcast subscribers, please make yourself known by putting a comment in the section. I really appreciate it. If you haven't already, get that purchase contract. Just text us at 435-294-0433. Text us your email address, and you'll get a copy of it. Oh, thanks. Kate's got our podcast iTunes links rolling up there. Appreciate it. Take a look at those. Our winner of the week. Okay, this is our t-shirt winner of the week. We're going to give away one of our I Flippin' Did It shirts, but I'm super excited. I'm super bummed. I've got a new shirt on today called Flipping Legend that I think you guys are going to love. It's a great summertime shirt. But our winner for last week is Ellie Johnson. Ellie, thank you for being our winner, our t-shirt winner of the week. If you're with us today, please make some comments, make some noise, and everybody else, please give Ellie Ellie a congratulations or a thumbs up on being our winner. Ellie, thanks for your participation last week. We really appreciate it. Again, all the comments for today's video will be giving a winner away next week, and the comments that we're getting along the way as for the recorded videos. So Ellie, email us at support@DoHardMoney.com. Put down you are the shirt winner. Put in your screen name, your mailing address, your cell phone number, and your shirt size, and we will send you out a free t-shirt on our dime with pay for ship, pay for shirt, pay for the whole thing. Again, if you haven't gotten that purchase contract, check it out. Text us at 435-294-0433. You're going to want to get your hands on that. All those who participate this week, you will find out who is our winner of the week next week. So make sure you tune in with us, same time, same place. Now, next week, we're going to be talking about how much can you realistically earn your first 5 years of real estate investing. This is a fantastic topic. We're getting into details. We're going to talk about all kinds of cool stuff. How much can you earn in the first 5 years of real estate investing? Coming to you live next week. Same time, same place, 6 p.m. Eastern Standard Time. If you haven't already, grab a copy of that purchase contract. Just text your email address to 435-294-0433. Otherwise, guys, make it a very profitable day, and bye for now.